The SEC is considered as the body that's in charge of protecting investors from fraud and other malicious activities in the financial market. But honestly, who will protect the investors from this regulatory body? An article published on Forbes, one of the leading magazines in the world, wrote more about this information, and their facts are right on track. I believe this regulatory body has been tasked with the most crucial job of all. But instead, they are doing the reverse and attacking cryptos they should be supporting. Stick around until the end. I will explain classic reversal patterns of technical analysis with their targets to you. But before we get down to discuss more on that, let's roll that intro. What's up, guys? Welcome to MoneySide, your favorite crypto news channel. If you are new here, hit that subscribe button and turn on notifications so you get up-to-date news when we drop new content. To my MoneySide family, welcome back. Well, today I plan to give you nothing but the facts about Ripple and why I think investors are at risk. So sit down, relax, and don't touch that dial. And no, don't forget to smash that like button and comment in the section below. To get us started is this video by John Deaton that explains in detail why XRP is not a security. In fact, John goes on to say that XRP holders are using this token to actually buy Ripple stocks. They are using XRP as a cryptocurrency to buy a security, which gets me thinking, did the SEC know that Ripple is literally selling stocks legally? Of course they did know. I mean, they are the regulatory body in that sector. Now, here's the interesting part. Do you think a company that already has stocks that it sells would go to the extent of conning its crypto fans by selling unregistered securities? Mind you, this company depends on its reputation with the crypto community. Well, if I was the head of Ripple, that's the one mistake I would actually avoid making. So it's either Ripple's CEOs are too stupid to think that they would have never gotten caught, or the SEC is just trying to mount a case they already know they'd never win. I'm more inclined to the second answer because honestly, CEOs of a grand company like Ripple wouldn't make such unfair mistakes. Besides, just operating within the legal boundaries, Ripple could easily make millions, if not billions more than selling unregistered securities. So the bottom line here is that the SEC is just attacking the wrong crypto intentionally or unintentionally. My thought is that there's clearly a bigger picture that most are missing. I don't think the SEC has any malicious intent against Ripple, and if they do, I'm sure they're only trying to protect Ethereum. But at what cost? Anyway, that means all that needs to happen is that we continue being patient for this coin to moon. Even though there are many forces trying to hold this coin down, it will eventually rise up and no one can stop it. Yep, you heard that right. For the past year, this coin has been battling the SEC and other whales in the mix and still managed to stay afloat. Even after all that, more importantly, within the span of 1 year, XRP has made noticeable partnerships, ventured into new tech, and also bounced to above the dollar mark. If that isn't a soon-to-be bullish crypto, I don't know what is. Another tweet that offers more insight into the future of XRP is this one by XRP Crypto Wolf. He goes on to say that if Ripple wins the SEC lawsuit, only Bitcoin and Ripple will be safe. Even though this lawsuit was meant to damage XRP, funny enough, it's actually the one thing that could give this coin an advantage. And the only reason why Bitcoin will survive is because there's no one to sue. Otherwise, the hailed crypto king could have been taken down by the regulatory body a long time ago. That's because so many criminal offenses have been committed with these cryptos that it's actually hard to keep up. And that's not all. Bitcoin isn't even environmentally friendly, and we are all turning a blind eye on that because you know what? So many of us have invested in Bitcoin and we can't afford to see it fall. Now see the dynamic between these two cryptos. On one hand, we are trying to keep a crypto afloat that doesn't even deserve to be on top. While on the other hand, XRP is taking hits from all corners and some it doesn't even deserve. But sooner rather than later, this coin will disprove everyone. Ripple's investor SBI and SIX announced they are going to have a joint venture for Liquidity Hub, and guess where the core technology will come from? It's none other than Ripple. You see, guys, no matter how hard they try, this company keeps getting better and better by the day. And that's what infuriates the opposing parties. Now that we know that Ripple is headed to the moon, expect nothing but pressure to resist this coin's move up. But as the pressure continues to build up, so does the potential of this coin to moon overnight increases. That's because the tech team behind XRP isn't sleeping a wink. They are constantly working to improve the crypto, and that is what will continue to steer this coin forward. Lastly is this tweet by Stuart. It's rather a bit outdated, but he points out something that we should have all seen in this case. The SEC is making it up as it goes, which is totally true. It's like the regulatory body has unlimited excuses to give and reasons why the court case should continue to be dragged even further. Personally, I don't see a case or even the reason why this court case has been pushed to next year. If they were going to settle, they should have done that already. Anyway, time now to look at the XRP chart and the classic reversal patterns explanations. If we could do measured moves on the log chart the same way we do on a linear chart, then this pattern would be calling for a breakout target of around $700. That sounds way too extreme to me, so I doubt you can apply the same measured move techniques from a linear chart to a log one. I would be happy to be proven wrong, though. One thing I know, it's gonna inevitably continue going up in the not-so-distant future, but probably not going anywhere as high as $700. Now, in this chart, I will try and show you the most important classic reversal patterns of technical analysis with their targets. A head and shoulders pattern is a chart formation that appears as a baseline with three peaks, where the outside two are close in height and the middle is highest. In technical analysis, a head and shoulders pattern describes a specific chart formation that predicts a bullish to bearish trend reversal. All definitions for inverse head and shoulder pattern are the opposite. The triple top is a type of chart pattern used in technical analysis to predict the reversal in the movement of an asset's price. Consisting of three peaks, a triple top signals that the asset may no longer be rallying and that lower prices may be on the way. All definitions for triple bottom pattern are the opposite. A double top is an extremely bearish technical reversal pattern that forms after an asset reaches a high price 2 consecutive times with a moderate decline between the two highs. It is confirmed once the asset's price falls below a support level equal to the low between the two prior highs. All definitions for double bottom pattern are the opposite. A diamond top formation is a technical analysis pattern that often occurs at or near market tops and can signal a reversal of an uptrend. It is so named because the trend lines connecting the peaks and troughs carved out by the security's price action form the shape of a diamond. All definitions for diamond bottom pattern are the opposite. A cup and handle price pattern on a securities price chart is a technical indicator that resembles a cup with a handle where the cup is in the shape of a U and the handle has a slight downward drift. The cup and handle is considered a bullish signal, with the right-hand side of the pattern typically experiencing lower trading volume. The pattern's formation may be seen as short as 7 weeks or as long as 65 weeks. All definitions for inverse cup and handle pattern are the opposite. A rising wedge is a technical indicator suggesting a reversal pattern frequently seen in bear markets. This pattern shows up in charts when the price moves upward with pivot highs and lows converging towards a single point known as the apex. Using two trend lines, one for drawing across two or more pivot highs and one connecting two or more pivot lows, convergence is apparent toward the upper right part of the chart. All definitions for falling wedge pattern are the opposite. An ascending broadening wedge is a bearish chart pattern said to be a reversal pattern. It is formed by two diverging bullish lines. All definitions for descending broadening wedge patterns are the opposite. Well, friends, that's all for today. Do your own research. Hope you found that interesting, and as always, trade safely, guys. Please keep in mind, we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. Tell us what you think in the comment section below, and let's have a conversation. Thank you very much for watching. Couldn't be here without you. Don't forget to like this video, and please click on that subscribe button below. And be sure to turn on notifications so you get informed whenever we post our amazing content. Thanks again, and we'll look forward to seeing you on the next Money Side.